All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. All right, let's go do this. We're bumping up on the time stop here for Netflix here today. It's been kind of a wild trade, wild ride of a trade here. So going to back on out and take it here. I just have a limit order for 1040 in, and they filled me here at 1040. So out of Netflix here at 1040. And yeah, I'll let me make sure the alert's out, and then we'll talk about it just a little bit. All right, so 1040, and that is out. All right. All right, so if we come in, here we have Netflix 1040, and we ultimately made a little money on it, 160 bucks. Nothing really to write home about. And both Micron and Netflix, kind of that same thing. Just so close, but not there here. Just not there within our constraints, and so on to the next one. We do have CSX on the board here, and CSX. Let me pull it up here. The price on it. We're looking at 365, 365 here for CSX. So it puts the challenge over 3,500. Tomorrow I'm going to break down. Tomorrow's the 30th day of the challenge, so I'm going to break down the trades a little bit more, look at the data in terms of a summary, similar to what we did last challenge, where compared the numbers for this challenge to what I expect to happen over time. This challenge for me is underperforming. Some of that simply has to do with the start. We basically started with $1,000 handicap, so if we look from that point of challenge being at 2,000, now it's up at 3,500 without really a trade that has performed. We haven't had anything but Micron. Micron hit its first price target, and that's it, and then gave back a bunch of it. So it's just one where we haven't seen a trade really perform, so far this challenge. But we're still, bad start. No real performers, still slightly in the green here, and still in a good position to attack and to go after, various signals and continue the process here with the challenge. So, new signals here today. We have two new signals on the board. I'm not going to trade either one of them. I would love to, and I looked at the options every which way I possibly could to find a way. It just, I can't justify it. The Walmart and Target both are triggering bullish here today, and we have Walmart, just a beautiful chart. Kicking off the lower Bollinger Band, which I know doesn't matter, but has everything the challenge, entry would want. Nice bullish signal, but does have earnings here in 9 days. And so the options just simply they're not worth the risk, right? And let me show you what I mean here. If we come into Walmart and we go out the 30 days, I'm looking at the money, 118. It's 355 for a 50-cent delta, which means I need the stock to rally $7 to double my money. Well, the average true range is $1.40, so 280 is 2 average true ranges, right? Even if I go 4 average true ranges, I haven't moved enough. We haven't had the stock move enough to double our money on the option, which is ridiculous. It doesn't make any sense. And, I looked, okay, do I cut the time a little bit? And yeah, we can, get a little better ratio by cutting the time just a little bit. We're not going to have a lot of time decay or implied volatility loss ahead of earnings, but, it's just one where, we need such a huge move for it to happen that I decided I'm not going to trade it. I'm going to hold off, and I will wait for the next signal and go after it there. So that's what I'm going to do here with both Walmart and Target, and they're both just very similar in terms of option pricing, in terms of the magnitude of move you need to see in order to get a double on the option. And I know we don't have to get a double on the option, right? But if I don't have the potential to double my money on the option with a 2 average true range move, is it worth taking that risk? Because we can see the option go to zero very easily with just something, fluky, out there on the table. So I'm not going to trade either of them. I'm going to let them pass here. And, but both of them are charts that are very nice here. And both of them are charts where I might, go buy some weeklies here personally, here before the close of the market today. The other thing I might go buy some personal weeklies on is NFLX. Today the downgrade and, slapped it on down here. Yeah, a gap down tomorrow would be very ugly. A gap down and a break below today's lows. Early tomorrow, we can see this thing skid down to 275. And from a challenge perspective and wanting to get in it for the challenge again, I'd love to see that. I'm not convinced that's what we'll see. I still think, this thing has another date with 300. So, we'll see. But anyway, two things that I'm looking at, going into the close of the market, here today. We have some things like a Boeing that had a crossover the other day. Boeing did qualify, for a challenge trigger. At least I don't believe it did. It didn't. But it's moving on up nicely. We have IBM, which triggered yesterday, and I could get in here today. I've looked at it, looked at the option pricing and everything here with it, and the risk factor. Just decided I'm going to wait for the next signal. Next signal comes in, we'll take it and go. So I'm going to hold CSX here into the close. CSX is, it's not up at its profit level. It's nowhere close to its stop level, and its time stop, the red time stop comes in tomorrow. We have another 6 days till the green time stop comes in, so nothing, really to deal with that. We now have 2,000, almost 2,100 cash, to play with here for the next trade. I won't put all 2,100 into it, but we still have the ability to make a very, very sizable trade, going into the next signal. And the reality is we need one solid trade, and we have our first double here for the challenge, and we're not far away from that, and we just need some of the averages to start to filter out in our favor, and we'll be in a good spot. But I'll talk a little bit more about that here tomorrow when we do the 30-day summary here, and that will be posted. As far as anything on the market today and whatnot, the broader market, there's nothing really here that I look at and say, well, anything's changed. I mean, this is as bull market of a type of day as a bull market gets, where you have some sectors up, some sectors down, and the market just drifting, not really doing anything. I wouldn't be surprised to see, a little bit of drop tomorrow or something like that, back to the 7-day moving average, and then rally into the end of the week. That would be pretty normal, but it looks, it very much just simply looks like one of these stages, like back here in April, or what we saw in June, July, in terms of, just market action itself. The only difference is we have, semiconductors, financials, transports, all making new highs in a very bullish, in a very bullish fashion. And we still need, the bears, they still need a catalyst, right? They still need a catalyst to, really give the bulls a run for their money here going forward. One stock, I'm very bullish on, Adobe. Has finally had a little bit of a change in this pullback. It's been on this kind of just slow-mo pullback. Finally getting a nice move, a big uptick here. This is one I would love to see pull back a little bit, give us a nice challenge signal, play back up into the 300s. And the way that its action has been, we will see that potential here in the weeks ahead. But, still very positive signs, for the market in general. Twilio is one I've talked about for, an investment side thing. It's not something I can trade for the challenge on the upside here just yet. We're nowhere close to a high or low. And I mentioned I'd be interested if and when Twilio broke 100. And the answer is yes, I'm very interested. But we also saw earnings take it down below 100. And I went through the earnings. And the earnings, I don't think, changed the long-term story at all for Twilio. But I do think they change a little bit for Twilio in terms of the urgency to get in. Meaning, if I don't jump in right here, I don't think I'm missing a whole lot. I don't think this earnings report is good enough to say, well, you know what, market's just going to reverse this and it's going back to 150, sooner than later without a catalyst. And so for me, it's one that I think I can be very patient with and simply look for some buy pressure to come in. Where do I look for that? Well, I'm looking for the stock to close above the high from the prior day, right? That's typically when we see earnings slides end, right? When the stock closes above the high from the prior day, that doesn't necessarily mean, okay, the stock's ready to go and it's just going to go up and away. But it does mean, okay, you know what? The big bad sell pressure is finally gone. We can probably talk a little bit more about uptick, from that moment. And so far, we haven't seen that here, with Twilio or some of the others that, are cratering here on earnings. And, you could argue and say rightfully so. But when you have a revenue growth company like a Twilio, and look, investors want to see earnings put into Twilio, which they haven't done yet. But when you have this type of revenue growth story, you still got to keep an eye there on the upside. The last stock I'm going to refer to here is Beyond Meat, BYND. Now, this has been a very trendy stock here. You've probably seen some of the commercials and all that kind of stuff. Went all the way up here to 240. It's now back to 80, right? So, these candles may look small, but this thing moves, and it moves pretty big here. And, whenever you're talking about an IPO, and I'm not exactly positive about the lockup period here, but I'm sure there's some shares that are 6 month, right? And, we're now here coming in on the 6 month. Where, I bet you a lot of investors are going to be able to start selling, and, that could put some serious downside pressure again here on the stock before seeing some upside. You have competition concerns that continue to grow, right? The fact of the matter is other major food companies, they can kind of do what Beyond Meat does in many regards. And I know, for those that are super bullish on Beyond Meat, that's blasphemy to say anything like that. But, it's just simply one where, for me, to be a buyer of Beyond Meat, you got to show me. Meaning, I've got to see some sort of technical improvement here. We have enough history in the stock that, the indicators matter for me. And it's something where, okay, give me something. I don't even have a MACD crossover. We're still below the 7-day moving average. We're still with expanding Bollinger Bands to the downside, lower lows, lower highs. Everything from a technical standpoint is pointing lower. And, even the oversold indicators aren't really all that great. So, for me, I need some sort of evidence that, investors are breathing life back into the stock. And so far, I have not seen any of that evidence. And so it's not something that I'm going to, jump into here. Okay. Alrighty. I'm just getting word It does look like some of the text alerts have not gone out for the Netflix exit, and it looks as if it's carrier specific on the issue. Is that right, Jason? Okay. Yeah, so it's carrier specific on the issue. Looks like T-Mobile Sprint may not be getting, and Verizon AT&T may be getting. Jason is digging into that. When I know more, I will pass it along here. But again, we send out via text, tweet. I do them live on video, and we send it out via email for all the backups for the any possible technology issues. And unfortunately, the text, it's always the most reliable, but here in the last week, it looks like the second time that we've had an issue here. So I will keep you posted on that and let you know when anything is found out. All right. So going into the close with CSX and cash, and we'll look for the next trigger and look to a run here with that. Thanks for hopping on. Thanks for being with us here at Trader Minute. Have yourselves a great evening, and we'll talk to you later. Take care.